Hey guys, yep, the gold chart. And what a chart. If you were to talk about a chart or a story that has become the main theme of the recent weeks, precious metals would have to be it. And the banner, the flag bearer of precious metals is gold. Yes, we're interested in silver. Yes, palladium, platinum, etc., etc. But gold is the king. And today is, yes, wait for it, I'm going to be here and providing the useful service of letting you know the date. It is the 2nd of September, and that's an interesting date. It's an interesting date for a number of reasons. I wore a younger man's clothes some 10 years ago to this very day. And I made a prediction about gold on the 2nd of September, which was also a Monday, 10 years ago. In the same way, today we sit 10 years in the future on a Monday regarding precious metals. And it's a fascinating look back and in some senses. And I will show you a thread that I started that was called September, the 2nd of September is the day. And this thread I did on Trade to Win many years ago. I started it. I thought I'd give a free trade out from that which I was doing in my premium area, and said 2nd of September 2009. This was the bottom of the worst period ever economically. Nobody was more grim in 2009, particularly Britain, where I was based at the time, in a very heavy reliance on the financial services sector. Most of the banking system had gone to the wall and was ward of state. All the Scottish banks, Royal Bank and Bank of Scotland, along with other banks that they bought in shotgun weddings just prior to all falling over, BNP Paribas, Fortis, you name it. Only HSBC largely and Barclays just subject to a very dodgy Qatari loan made for some very curious financials behind closed doors, kept Barclays out of the mire. They also acquired large valuable segments of Lehman Brothers as well, which had gone bust in '08 and had created the entire bombed out depression world that we were in. That actually saw the Rolling Stones come out of a retirement for a single called Doom and Gloom, which wasn't 2009, but it was a couple of years thereafter, promoted by the entire bomb out of what happened. Anyway, during that period, we said well beyond 1200 would run. In fact, we had an inside number of 1300, up to 1300. Gold had just broken a key level of significance, 971, and I'm going to take you back to that chart. So I gave this as a trade to folks and said that this is going to be a major bull move in gold, to which I provoked the ire of some no lesser lights than Mr. Rothschild himself. Nathan Rothschild popped by to come and inform me that gold longs will be massively disappointed, and there's far too much resistance to get through, and the fundamentals don't call for higher gold prices. There were many more like Mr. Rothschild that mocked and took great delight in making such a key point and statement. And it was the 2nd of September for me that the key level of significance fell, aka it was there on that single candle there. Why didn't I show you a little bit more? I will, in fact, but before, I want to remind you of the legacy of Brown's bottom. That is these 2000s over here, writing it in double thick Koki. I should probably do it if I had any whimsical sense of humor. I should probably do it in a nice thick dark brown line, and that's it, Brown's bottom. And during those periods, if you have a look across here, you had $200 to $250 people gold. That's right, you could buy an ounce of gold for $250. I will say that you got more for $1 in those days, 2001, than you do today, but even still, that was exceptionally cheap. Anyway, so let's take you into this moment that's provoked me into the September the 2nd, because it's significant again today. We were trading the precious metals quite successfully on a number of setups just prior to that. There. Ooh, let's lose the brown, shall we? We'll go straight back to our pretty in. You thought I was going to say pink. It's actually crimson red. That's also quite a fat pen as well, so we'll maybe change that too. Getting into nice and thin. And we traded fairly successfully, and then we had a run-up as a result of these structures, a very powerful run-up, and the entire thing got taken back in the 2008-2009 run to the dollar. This is history, economic history of our times, people. The run to the dollar saw gold that had made at that juncture an all-time high, and that was just through the $1,000 mark, sell all the way down to the 690 levels, largely back to whence it came, around tripper, which to most people was very negative. But then you see the solutions, they say, the solutions. Quantitative easing became the discussion of the moment and the discussion of our times. And quite remarkably, gold then took it upon itself to recover a large amount of what it gave up and stopped just shy of the 1,000. It traded 1,003, I think it was, and then sell off. And it formed an interesting little fractal in there. And we said there will be a new move in gold. Now, this was all during this very, very quiet, low volatility period that followed, and I'm going to drop you down into this, was all during the August period, which we've just concluded ourselves now, and was super quiet. It was super quiet and super tight, and it was low volatility, and it prompted me to say we are going to have a very big move as a result of that. And roughly where that purple line is was our call. And in fact, we suspected that $1,300 would fall as well and beyond. In other words, there was a degree of suspicion that some element of overperformance might take place. Anyway, in light of that, those conclusions, we did the thread and said the critical moment occurred here. Now, if I put that cursor on there, it should show that our full confirmation occurred only on the 2nd of September. I was already long on this rather sexy candle, but let's just confirm that. History says this was the week of 31st of August, and it was the breakout event, and it included the 2nd of September because the next week was the 7th of September commencing. So in that one moment when we broke on that clear-cut triggering event, and some of you that are smart technically would say, well, why not have a look at the volume as well? That was the first Monday back in the September when all the northern hemisphere, and this was new to me, I was from the south, but everybody goes away in August and the northern hemisphere shuts up, particularly in Europe, France, whatever. Don't even try achieve anything half the time. Only the restaurants and the wineries are open, and that was a breakout candle. So that led to it. Gentlemen, you're going to have a bull run in gold, I said. You shall have a bull run in gold. It will go quite potentially to 1,200, through 1,200. I had a whisper number of 1,300 that I didn't care to share, and the possibility of overperformance. From that point there has been the last time ever that gold traded below $1,000. From that breaking event, it never looked back. It took the $1,000, and those lows there were the last time ever that it traded $1,000. And I suspect, as long as we have the dollars that we have today, which may not be forever, by the way, that is the last time you will ever see it at $1,000. Although never say never, it is not entirely likely to me. Oh, how nice. Bitcoin is moving as well on an alert. Anyway, that part aside, what do we have? Well, we have for ourselves right here a continual bull market that eventually met our notional target that then went on to run through the 1300. Not only through the 1300, but as I pull and remove these drawings and give you more of the future, you probably know that we ended up topping out at 1976. This was the day the markets took direction, when the Northern Hemisphere, the financial world, is unfortunately or fortunately resides in one half of the globe broadly, certainly 75% thereof, and probably more. And that led to eventual blow-off move in this final little squeeze that we were also fortunate to trade right the way up into that. Now, when you go parabolic, it's the beginning of the end, and that was your first major slap in the face warning. And then you had this flat bottom structure, which traditionally many would know as a descending triangle. Now, when you get overperformance, what tends to happen is, after that point and period of overperformance, there's your 1927. There's your 1275 and your 1300 just above that. When you get overperformance, you then get a sustained period. If you have excessive overperformance, which we clearly did by a further better part of $650 to our expectations, you then get a sustained period of underperformance. And what happened is, gold and the precious metals market then moved into a long-term bear market. You see, the control structure and your financial engineers of choice do not like when their shenanigans are exposed by something as honest and truthful as an ounce of gold that remains an ounce of gold, no matter whether it's 3,000 years later, 10,000 years ago. Pure gold is pure gold. It lays no babies, it pays no interest, but it also charges no interest. And now, as we move into a treasury environment where some of the 70% of the developed world now, mainly Europe, are charging negative interest rates for the risk-free, inverted commas, of having a government such as Germany, Sweden, etc. hold your money. They actually charge you for this zero downside risk. It is guaranteed risk because, of course, your money gets diminished and they want you to spend it, they want you to throw it at stocks, and that's what then happens. And now we are 10 years to the day, and it is a Monday to the day. And we've had a similar event, although it didn't wait till September for it to happen, folks. It didn't wait for September to happen. It's actually probably due its first rest of many. Interestingly enough, that incredible target that was generated came very, very close to being what is a neckline on the current bull that we now face. So I'm going to populate this chart for you and illustrate how we assess the bull market, and also to say that we were bearish for a long, long time, and we didn't give the gold and precious metal bulls what they wanted and sought to hear for a long, long period. In fact, it was only upon the running of that 1350 level, that's right, 1350, which is probably the target that the original setup should have made and could have saved a big round trip up to 1900 and another round trip down to just above the 1,000 level at 10,040 and some change. This typically is your left shoulder with your complex bottom, kind of a bit of a W, and right shouldering either there or double right shoulder. You kind of had a double left shoulder in there as well. It's a very complex bottoming process, and continually we warned and we traded this particular inverted structure on the way down. We actually went short. Whilst passionate about the value of what gold represents, we traded it short. We invested long and bought it into its selling and diminishing value on an unleveraged basis with cash that was available, after the great descending triangle that's set up for gold on the 1575. Pen again, and this is your history almost of gold right here. Your double left shoulder, your double head, and your double right shoulder. In fact, as well, when you do patterns, you can recognize that multiples of patterns actually exist within each other. And in fact, that's what gave us the call for the 1350 level is confirmed. It was just below. It was 1348s, 1349s. That you should be a buyer of gold at the last moment, and that you could have a safe stop over there. And it's quite likely that stop may not ever be seen again, and that the bottom for gold is in just below the 1050 after making 1927. Not on this particular one, it looks more like 1923 on forex.com. Bear in mind these vary according to the independent brokers. So you've actually had the better part of nearly $900 be given up from its blow off high. Remember, that was the beginning of the end, the blow off, and that was your descending triangle that created it. Squeeze across the top, trying to hold a level at the 1575. 1575 is interesting because we're now approaching these levels again. What else can I tell you about this? Well, we've had a number of targets that have been made by this gold market since we've been long. We've also elected to go long silver, which is a higher beta version of gold. And we're expecting and anticipating the eventual flippening on the gold-silver ratio. In other words, a very high gold-silver ratio means a gold ounce buys you very many silver ounces. That is now at a point where we expect it to flip. So if I clone that line and show you the traditional technical analysis patterns that exist, there is still a target to be run on gold. There is still a target to be run on gold. And we will anticipate this to happen and for it to occur. However, given what it's done already, and it has cleared a lot of HVF related targets, you can do a program and learn a lot more. You might think you have some idea, you can try draw them, but if you want to learn how to do it properly and understand, you'll realize that it's cleared a number of targets. It may rest for a while. Silver has been less restful and even stronger, but this is all about gold and the king bee of precious metals. So this is a very big move. You could have been right the way down from 1175. Now people who do crypto say that's not a big move. That's small beer. For gold it's a big move, but it's only really the beginning of a far bigger move, one suspects. It's only just the beginning of a far bigger move, one expects. And that is the key message I've come to give you. And for those of you that maybe are in the crypto community and would prefer to have even greater percentages, there's always silver. There's always silver, and we expect silver in percentage terms to 2.5 times outperform gold. In other words, the silver ratio, which actually hit 93.5, I will show this to you, we anticipate will actually pull back. Potentially to the 30 levels or lower. That means where previously the gold ounce bought you 93.5 at the high point, it may only just do 30. And in actual fact, that was the last low. You might recognize another traditional technical analysis pattern that I've done here for you. This is known as a rising wedge. You continue to get a squeezing and squeezing in a rising wedge. In other words, the lower side is being bought up faster. They both point up. That's why it's called rising. But the lower line is accelerating. That eventually leads to the risk of a possible crossing along here. We've fallen out of the top floor of this wedge. So here's the wedge I'm referring to. We have now recently broken that wedge. In other words, silver is now outperforming. Yes, 93.5 is where that high was. This is a weekly view of this chart, and this will show you that actually in the bull market highs of 19.7 1970 27 for gold, Silver went to $50, folks. Just a fraction under $50. That's me rounding slightly. Silver went to $50, and the ratio dropped to 30. The ratio dropped to 30. Now, if you assume this is nothing more than a QE fest of the scale of 2008 that is coming for us, and that we haven't just stored up new problems on a bigger scale, ever bigger, and that we don't have a major financial reset to come, you could reasonably assume that you might visit the 30 again. However, as poorer men flood into the precious metals markets, and if it is a reset on the scale that I think is required, in other words, the financial system is no longer fit for purpose, everyone has been synchronized and is over indebted, it's time to tip the chessboard over and start again, we've lost this game, it's checkmate from 4 different directions, then you could argue that the multiple for gold and silver could go even further lower. In fact, ancient and to fairly modern history actually had 15 ratio of gold to silver, and then it drifted into the 20s, then it drifted into the 30s, and it's only actually a function of our current monetary debt system that has seen the ratio go so far, so many times, and so high up. In other words, it probably doesn't reflect value, and it is an industrial metal as well as a precious metal. In other words, it gets consumed. Some of it gets recycled back, but a lot of it is lost. So that is where we are at. If you think you've missed the precious metals bull, I'm saying you might have missed 50-60% of the beginning phase of a super macro long tail event that's going to have many phases to it, of which the beginning is only one chapter. In other words, it can go a lot further. It can go a lot further. And this could be the beginning of a move that sees this go at least to 30 on something the scale of 2008 or 9, potentially beyond. Of course, if you think your central bankers are going to engineer a soft landing and that they haven't stored up ills from the previous recessions, depressions that are now going to come out ever bigger and ever stronger, well, then you should be more conservative in your estimation. I don't suffer from that conservatism, but of course I could always be wrong. I could always be wrong. So here is where you are at, the precious metals bull environment. Now I'm here to tell you, I will cover the precious metals and the silver chart that you have not seen in this video in our non-farm payroll that is coming. You can book a chat to become part of our community. You can also go to the Bullion Vault link that I've attached below. Slowly investing in Singapore-based silver, I think, is one of the smartest things you can do. You can do as little as $50 a month. You could even probably do less, and you can slowly accumulate. It is all 100% backed, and you can have your own name put on a bar, and it will not be allocated to any other person. There will be no rehypothecation. You can collect your bars. There will be fees involved for this, but not overly onerous. This is the most affordable solution compared to the big names that I'm seeing out of the States, like Mr. Maloney and Mr. Shift and any other website, internet marketeer that does this. You could also purchase platinum and gold. My personal favorite, silver in Singapore. You also, if you don't fancy Singapore, can have London, Munich, I'm joking, London, New York, and what's the third one? Toronto, I think, appeared in one of them, maybe gold. And yeah, London, New York, and Singapore. So, Zurich, that's the other one, in Switzerland if you prefer. My personal favorite is that, but I might be wrong. The Far East, I prefer it as far away from our Western control structure characters as I can get. So here is your setup for precious metals. We've been discussing this. We've been trading it as well. In fact, we've got another little entry long. You can leverage trade as well as your investing. I always suggest a trader has both an investment strategy as well as a trading strategy. If you know how to trade to a level and you understand what we're doing, you can get yourself far better entries, such as this one that we did literally the day. It's the 2nd of September up top there, as you can see. This was a Friday afternoon. You can learn how you can get good entries, how we get those. We don't always get them 100% right. Sometimes you miss them. It's not the impression I wish to give. But understanding, having a method, having a community, investing sanely, monthly, acquiring in what is going to be a far larger bull market, in my personal opinion, on my assessment of where we're at in terms of the financials. That could see silver fall to sub 30, could be 15, could be in the 20s. That could see it actually gain 3.5, 4 times to gold in an environment where gold will be going up very substantially. The notion that gold could go through 3,000 and 5,000 and even beyond 10,000 is actually quite plausible. Silver, if it was on 10,000, 1:10, could be $1,000. Am I saying that? No. Could be 500. Yes. Could be 300. It could be a lot. But the potential gain could be vast, and this could be something that protects you during these financial reset times. So check the links below. Come and join us for non-farm this Friday. What's the date? It's Monday, and it's the 2nd. Tuesday the 3rd, Wednesday the 4th, the 5th, the 6th. 6th of September with me, non-farm, precious metals and more. Markets take direction after the Northern Hemisphere returns to work. All the bankers are back. The institutions are back. The money's going to start moving. Big trades, big winners, big movements. You saw me get a pop and an alert on Bitcoin pushing up. There's lots of things that are tripping through wires and will be tripping through wires. You will get the first non-farm number after the Northern Hemisphere's big long summer break with me this Friday. Come and join me and start your investing with precious metals and gold. You want to talk about becoming a member in our community? Click the link below. Book a chat to talk to us about your trading experience and your profile. With that, I love you and leave you. Thanks for watching, and I hope to see some of you on Friday. Bye-bye for now.